there. It's Gabby here, and I have a pleasure of having Ali here. Ali Zaidi, principal broker of HOP. Thank you for joining me, Ali. How's it
Hi,
going?
you're welcome. Thanks for having me. It's great to see you.
Thank you. It's chilly outside, so we're all inside and doing Zooms there. Like perfect day.
It's getting a little nippy. It's getting there. You're right.
At least it's not snowing. Yay. Points for fall.
Uh,
Could be
Fingers crossed.
worse.
So, what's on the
Anyway,
agenda today?
today in the agenda is like a question, why should I use the mortgage broker? I had a client ask me that, and his thing was, well, I can just go to any branch, okay, and they're gonna be doing it for me. I'm like, yeah, okay, sure. They'll be doing it for you, but will they do it as good as I will? Yeah. So I thought,
Well, you know what? It's a debatable question, and I've been asked that question many times. And you're an excellent broker. You have access to a lot of products, and you manage a large portfolio. I think you should be able to answer that question. The perspective I want to bring to the table is a little different than the traditional ones. So if I had a dollar every single time I've been asked that question, I'd be rich. Um, I've worked for banks all my life, and we used to have quotas. How many investment or checking accounts we opened a day, or how many credit card applications we took in, or even how many mortgages we sold for the month, right? We had a certain number of quotas and targets that we had to adhere to. And if we didn't, then guess what? And if we did, we would receive a small bonus at the end of the year to appreciate our massive efforts. The problem is the keyword there is sell. They're selling the mortgage. Mortgage is supposed to be an advice-based solution. So the bank is more protected with a fixed rate. That means you're tied down for 5 years. For the next 5 years, you're done. And that's not to say I'm suggesting a variable, but I'm just giving you that as one example of how not shopping around on a mortgage can result in a product that you're not benefiting from, because everyone's situation is different. Maybe they're there for 3 years. Maybe they're only going to be building some equity and then moving on, or maybe at some point in time, because of the situation, they have to refinance. So tying them into a product that's probably going to end up costing them $20,000, $30,000 as a penalty wipes out any savings that could have possibly been pitched at the time of getting a mortgage. But again, that's just one angle of why you should look at all your options. And why wouldn't you look high and low, check in with multiple sources? I find it hilarious when you're buying a $40,000 car. You'll go look at a Toyota, you'll go look at a Nissan, you'll go look at a Volkswagen. But when you're making pretty much the biggest decision that's related to an investment in your home, in your life, why won't you get a second opinion? You're going to go to RBC, then CIBC, then Scotia. Even if you end up going to the banks, that's 3 credit checks in a matter of days. What do you think that's going to do to your credit? And then beyond that, when you're working with RateShop, when you're working with us, you can get the 3 lowest rates in a single credit check, unbiased advice right off the bat. So when people ask me why work with a broker, I like to compare what we have to our disposal. For example, RBC. RBC's got a total of what, 7 different mortgage rates, products, and types, depending on insured, uninsured, insurable, right? And we have what, 20 lenders times 7 to 8 products with each lender. So when you're comparing 140, 160 products, or even more at times, depending on the credit unions and the monoline accesses that we have, it just makes more sense to have more options to choose from to get the best deal. Also, try calling your bank's rep at 10 p.m. at night, because if you're freaking out before you're putting in an offer on your property, and we answer the phone, we guide you regardless of when it is or where it is. It's because of our relationship with you as a client. That means from an application to the funding, through thick or thin, value comes back or not, banks give you an issue or not, last minute problems or not, we're with you. And that's a resource that you cannot get rid of. You cannot discount it either. How many horror stories have you heard about the pre-approvals getting canceled with the big banks?
Oh, a lot. And
Yeah.
clients losing deposits and all sorts of things happening from it.
And
Yeah.
I'm not going to lie, that's happened to us for a couple of deals as well. But at least we have options. Like if a lender nowadays, I'm hearing banks are actually scaling back the loan to value because of the hype in the market. So what used to be a typical norm, 80% loan to value, unless you have a lot of assets, they're not even going to fund you to a full 80%, which means you could get stuck with the need that you have. So having to use one bank and then getting declined, is it just not easier to work with a broker? And then I also keep hearing that the brokers' rates are higher. They're not. They're actually lower. They're much lower compared to the products that we have available. And in 9 out of 10 cases, we get paid by the bank. So we don't really have to worry about that angle either. But when you're talking about a pre-approval falling through, for example, because it has happened, we can jump from one lender to another seamlessly with the same credit check. At least we can save time and cost and not have to go through, jump through hoops for an extension or even avoid a credit check after a credit check, after a credit check because you're shopping banks. What a mortgage broker brings to the table is the ability to give you 5 different perspectives where the bank won't. They won't show you how to make a well plan. They won't guide you unless they're fulfilling their quotas. And even if you were about to make a mistake on an application, for example, if you're disclosing a property that you have in the US that a payment is coming out of your account, I've seen scenarios where that ends up being a liability, even though it's not supposed to be. And that's just one example of how to manage the application. When the bank sees it, they're working for the bank. The rep is working for the bank. They have to disclose it. It is what it is. They're required to publish it the way it is and send it off to underwriting. Your advisor is not making the call on the approval. He doesn't know how to structure apps. He's got a massive load of applications, obviously more business than the brokers, which is why it's one order entry after another. And there's no specific precision in completing or underwriting a file to ensure. 9 out of 10 times, we actually know ahead of time that this file is approved for this lender for this rate, and this is how it's going to get structured. That's the expertise that it's not available. It's just not available on a branch level or on a bank level. So when you're working with an advisor with Rate Shop, understand that not only do you get access to multiple lenders and the best rates, we suit the mortgage according to your needs and we guide you instead of the rush behind a fixed rate or the rush behind a variable rate where people just tend to follow whichever direction the herd is going. Instead of working off of that theory, we give you advice based on your needs. And that's why Rate Shop is different. And that's why you should use a
Awesome.
broker.
Reach up for the win.
Rate Shop for the win.
Thank you, Ali. That was amazing. Well, thank you for joining. Have a good
Yeah, no
one.
problem. Thanks, you too. Bye.